Hold up. Before you make any real estate move here in the Dallas-Fort Worth market area, you need to see exactly what is happening. We're talking about expired listings that have spiked 25% in just the last 6 months. Interest rates that have dropped to 6.5% for the first time that we've ever seen in months and months and months. And check this out. 8 out of 10 sellers are making very massive mistakes right now. So whether you're looking in Alliance or that luxury Southlake market, the data that I'm about to show you will completely change your strategy. We've got median home prices in one market area that are 292% higher than the other. Inventory that is telling a very different story than what you are seeing on the news. And hey, what about those sweet spots that most agents don't even know exist? Well, I am Callie Spencer, the broker and owner over at Ritchie Realty. And today I'm going to be breaking down exclusive market data that is over 2,500 listings, showing you exactly where the opportunities are hiding and why timing your move correctly could literally save you, get this, a whole down payment's worth of money. So stay with me because this gets really interesting when we compare what is actually selling and what is sitting on the market for months. So let's start with the big news that is affecting every buyer and seller right now, and that is interest rates. Now, just this month, the Federal Reserve's cut the rates by 0.25%, which is the first cut that we have seen in quite some time. Now, this wasn't because everything is just so perfect with the economy. As a matter of fact, inflation is still sitting at about 2.9%, which is higher than the Fed's target of 2%. So why did they cut the rates? Well, it all comes down to jobs. Unemployment hit 4.2% in July, and we're seeing some cracks in the labor market. The job growth is stalling out, and the Fed's decided, that addressing the weakening job market was more important than waiting for inflation to hit their target. So here's what it means for you. And so as I'm going to do that, we're going to tee up our screen so that we can actually take a look at this together as we talk about these interest rates. Let me scroll back here a little bit to get to that screen for you. And what we are seeing with rates, here we go. Rates have been on a steady down, they're going on a downward trend, as you can see here. So they dropped from 6.8% back in May, where they were 6.8%, to around 6.5% today. And we're forecasting that they could actually hit 6.2% sometime in 2026. Now, that might not sound like a whole lot, but here's the real number that matters. Check it out. The average mortgage payment has already dropped by $250 a month from May to September. That's $3,000 less per year in your mortgage payment. And what could you do with that $3,000? Well, I could tell you what I would do. I'd be in Jamaica sitting there with a Mai Tai in my hands. Now, Wall Street, though, is pricing in about a 91% probability of continued rate cuts. That sounds great, right? But here's the catch. If inflation from tariffs and other policies kicks in stronger than what they've expected, we could see rates go back up in 2026. The Fed is betting that any inflation will be temporary, but that's a gamble. That could affect your buying power. And that's why I really want to bring up this conversation today as we are in the fall season when rates are dropping. Guess what? I've been doing this 16 years. We just don't know what's going to happen come 2026. Now, let's just go ahead and dive in. I know you want to know what's happening we're going to talk about the Alliance market, and then we're going to talk about the Southlake market. So let's dive into really what's happening in the Alliance market. And the numbers here tell a very fascinating story. Starting with the pricing, we're seeing about a 0.6% increase in the median close price year to date from what we saw last year. Now, that might seem small, but in this market, stability is actually the good news. The median close price in Alliance is sitting at about $399 and some change compared to $397 just last year. This is showing market resilience with healthy, steady growth rather than the wild swings that we have been seeing in all of the previous years. So as you can see here, even going from January with a median sales price around 377 and some change, now as we closed out August, we're at 401 and some change with the peak that we saw in June. Go back and review some of my other market reports and you can hear about how I predicted that, yeah, June was going to be when we saw the peak in our prices. We had those seasonal peaks. This fall, if you've been following me along, you know that it could be a very telling fall because of what we are just talking about, and that's the rates. Now, here's where it gets interesting and where, hey, if you're a seller, you really need to tune in and pay attention. Inventory is telling a very different story. We are looking at, let me get to that here. We're looking at about 4 months supply of inventory consistently. That's what we've seen through all of 2025, with the days on market climbing from 31 days, as you can see, back in April to 38 days as we closed out August. So properties are taking longer to sell. That's the fact. Now, here's the kicker though, and it just always surprises me, and I've been talking about that. 8 out of 10 sellers are still thinking that they're going to be able to get over their asking price. But the data is showing that these sellers are listing their home on average about $25,000 higher than the final sales price. That's about a 6.3% overpricing penalty. You heard that? It's a penalty. And it's showing up right here on our expired listing data. So check it out. Expired listings have increased 25% from March to August, jumping from 181 expired listings in March to 226 in August. Meanwhile, the price ratio percentage has dropped from 98% to 97.3%. So what this means is that overpriced homes are sitting on the market longer and eventually showing up on this list where they get expired or canceled. Now let's talk about, the gold here, the sweet spots in Alliance, if you would. If you're buying or selling, these are the characteristics that are actually moving. Let's talk about size of the home. The sweet spot on the size, as you can see right here, between 1,500 to 2,000 square feet. Bedrooms, we're seeing about the 3 to 4 bedroom homes that are taking up about 83% of the market. And for amenities, check out the pools, right? Pool homes are absolutely crushing it. To no surprise, they outperform the non-pool homes by 12.2 percentage points. Now, let's switch gears over here and let's talk about neighborhoods. What neighborhoods seem to be the highest demand? Well, of course, you're going to have new construction areas such as Rancho Canyon, Sweetgrass, Madero that are all offering, sweet incentives to move into a home. But the pre-existing homes, those that are in Villages of Woodland Springs, those that are in Saratoga, those that are in Heritage are really showing as the strongest performers. So, what about the sweet spot on the price for Alliance? Take a look at this. We're seeing that sweet spot be right between $300,000 and $500,000 price range. This represents the highest volume of market activity with about 51.1 success rate. This is where the majority of successful sales are happening. Your accessible middle market focus, where buyers are having the most opportunity and the most activity. All right, so let's shift gears. Let's go to the luxury market over here in Southlake, just down the road. So, because it really paints up dramatically different when it comes to the numbers. We're talking about a completely different pricing tier. The median sales price here in Southlake is almost at $1.6 million. That's 292% higher than what we saw in Alliance, where we're firmly into luxury territory, if you would, at this point, and the market dynamics are going to be totally different. So in Southlake, let's talk about this. Size matters more, even more. than what we saw in Alliance. Alliance buyers preferred homes that were under 3,000 square feet, which took about 78% of the market. Whereas in Southlake, buyers are expecting 3,000 plus square feet homes, representing about 84% of the market. The luxury market expects to have larger homes. Now let's talk about, the bedroom count, as you can see here. So if you remember back in Alliance, we were looking at 3 to 4 bedrooms, which dominated at about 85% of the market. But in Southlake, the 4 to 5 plus bedrooms are sharing about 87% of the market. Now, here's where it really kind of gets a little interesting about Southlake. Pools. Let's go back to pools. Pools in Southlake aren't just nice to have. They're expected. So look at this, 67.8%. Oh, I'm sorry, I'm not even on the pools. Let's get to the pools. Did I already pass through there? Well, we had pools somewhere. Here we go. I'm sorry. Where we go? Pools. I was just switching a little too fast. The pools in Southlake, 67.8% of Southlake homes have pools. And pool homes boost performance significantly. This is a completely different story than what we saw in Alliance, where pools, actually boost performance by about 12.2 percentage points. But in Southlake, pools are practically standard equipment, if you would. All right, so let's talk about that sweet spot. We've got, again, going back to where we were, 1 million to 1.5 million range, which represents about 33.7% of the market, with about almost an 80% success rate. That's your luxury market leader. Now for neighborhoods, let's go to this because I really love to know, hey, what neighborhoods are really the highest demand here in Southlake? So the established areas are actually performing exceptionally well. Southridge Lakes, Timber Lakes, the Myers Meadow, they're all showing about 75% success rate with very solid volume. Now, take a look at Tiburon. It's offering both of the best, it's offering both of the, how can I say this? It's offering the best of both worlds with about 66% listings and about a 72% success rate. That's your largest established neighborhood with very solid results. So what does all of this mean when we are comparing Alliance and Southlake? Well, these are two completely different markets serving different buyer profiles, if you would. Alliance is going to be your accessible middle market with a median sales price around $400,000, while Southlake is luxury focused at nearly $1.6 million median sales price. The Alliance buyers are focused on value and functionality. They want the 3 to 4 bedroom homes, under 3,000 square footage, and pools actually add significant value, boosting performance by over 12 percentage points in that market area. Now, Southlake buyers have a completely different expectation. They want the 4 to 5 bedroom homes over 3,000 square feet. And again, pools are not just expected, they are just basically standard in this luxury market. All right, so let's see if I can get here. So again, just another analysis here on prices versus the Alliance and also the Southlake market area. So price points under $700,000 in Alliance, those are going to be your sweet spot. Remember, we were really seeing 3 to 500 is really the sweet spot. And Southlake, again, you've got 1 million to 1.5 million. That's your luxury market leader again. So here's your action plan based on this data. Okay, you ready? If you are selling an Alliance, price aggressively from day one. Remember, that 6.3 pricing penalty if you are overpricing. Focus on 3 to 4 bedroom homes, 1,500 to 2, let's just say under 3,000 square feet. And if you have a pool, that is a major selling advantage. All right, let's talk about if you're selling in Southlake. Let me go ahead and stop sharing my screen here. Emphasize luxury, size, and those luxury features. Pools, again, expected standard equipment. Focus on established neighborhoods with proven track records, and the 1 to 1.5 million price range is your sweet spot for both volume and success rate. All right, let's switch gears real quick to buyers. Alliance is offering opportunities in the 3 to 500 price range, especially with inventory still sitting longer. Interest rates are trending down from 6.5% to potentially 6.2% in 2026. But again, I always caution, don't chance it. Go ahead and make the move now. You can always refinance later. Southlake requires a different strategy focused on luxury features and established neighborhood. Bottom line, this market is all about understanding the specific dynamics of your price range. One size definitely does not fit all between Alliance and Southlake. So, what questions do you have about these markets? Make sure that you're dropping them into the comments below. And if this data helped you understand the market better, make sure to subscribe for the monthly updates that we will be sending out to you, just like this one. The market changes fast, and having the right data makes all the difference when helping you make real estate decisions. Thanks for tuning in, and I will see you back here again next month as we continue to explore some other areas here in the Dallas-Fort Worth market area.